Welcome everybody to the Chinchilla Picking Podcast. It is September the 21st, 2025 at 4:06 p.m. Welcome to the first day of fall. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I'm joined by the one and only, the Baron of Bonds himself, Brandon Beaver. Brandon, how are you?
Good. How about yourself?
I am doing fantastic, man. It is the first day of fall. It's time to get your pumpkin spice latte out. It's time to go Halloween costume shopping, schedule your Halloween party lined up. How many stops are we having to get together at your house, man, or what's up?
No.
I knew the answers
Uh,
was no. Like you don't do social events at all, but like
no.
thought I would put that out
Never.
there. We can do one at your house. You want to do one? Yeah, let's have a little get together at Brandon's house.
No.
I'll post his address and date and time for everybody to see all over social media.
I will move and burn down my house in the
You
process.
probably would. You probably would. Seriously though, it is the first day of fall. We are had a lot of stuff happen this past week. A lot of big news. Brandon did not tell me what he was going to talk about, which so I don't know if I'm because I'm just going to give a quick highlight of the news of the week. I don't know if I'm going to hit on your topics or not. I have no clue what you're going to talk about.
No, you're not. And there's no way you
Okay.
can guess it.
All
I
right.
don't think.
Good. Jerome Powell had some comments this past week, and the Fed did lower the interest rate by 25 basis points, which was lower than what the street was wanting. Now I was gonna say expecting, but they were only expecting 25. They were wanting 50, and I think that was bad news all around for the street. They were looking for that 50 basis points, but Jerome Powell was out there and he was there was a slight concern about stagflation. After Wednesday, Brandon, on CNBC, Bloomberg, Cheddar, everywhere I looked, all I heard from the talking heads was stagflation, stagflation, stagflation. And I was like, guys, there is no stagflation going to happen that I see. I don't see the data to show it.
I mean, I don't either at this point, but if it does, it's just something that we're going to handle. Um, we talk about this market news because it's what everybody else is talking about. So we report on it too,
Right?
right?
Yeah.
It has zero effect on the stocks that I pick. Except for
Yes.
one example, which I'm going to give in my talking, in what I'm going to talk about, which made sense. But
But I don't think it has zero effect on all stocks, but on a majority of what I'm invested in, it doesn't have much of an effect at all.
so it's not that it has zero effect on stocks; it has zero effect on my thesis.
Okay.
So, and then also stock picking in the sense that if you've got a good company with a fortress balance sheet and a good business plan with a good product, the trajectory of that stock is going to continue to be higher over the long term, despite whatever interest rates the Federal Reserve is pushing through.
There you go.
And those kind of companies will figure out ways to get around the headwinds or to work with them as best as they possibly can. And
Okay.
those are the kind of companies that you want in your portfolio regardless.
Gotcha. All right. Well, fair enough. There was that news. There was other news. There was a lot of good. I watched a number of CEO interviews this week, even though I was out of town. That's why we did not record a podcast last week. If you're wondering why, hey, David did it by himself for a quick 10-minute and then all of a sudden nothing last week. What's going on, guys? Well, I was out of town. I was over 2,000 miles away from where I'm currently at right now. I was in the great state of Oregon, out in the middle of nowhere, enjoying the mountains and the beautiful scenery on rivers and lakes. And Brandon told me I need to be posting you guys pictures of where I go all the time because it is gorgeous views everywhere I
Yeah.
go. And they are, they really are. But yeah, and Brandon wasn't feeling well, so that's the reason why there was no podcast. We were going to have guest speaker Nicholas Young on, and yeah, there you go.
Yeah, we need to build up a community a little bit more and be a little bit more interactive. You're the more personable person out of the two of us.
I
You're the most accessible person,
I
and you're
try
the
to
one
be.
that
I
people
try to
reach
be.
out to because of that. So you need to
Yeah.
start posting to the Instagram of the Chinchilla picking
Oh
account.
man. doing social media. You know how much I hate doing social media too. I really do. It's just, ugh, why do I got to do this? But it is I do need to do it. Like, I'll do a couple posts this week. It is a necessary part. It's just that I want everybody to come to the podcast because here's where we dive into the information and we kind of dig into it and we ask questions back and forth, and
Right.
you get the better answers. Then a
Right.
quick 1 minute video is not going to cover what you need to cover in order to understand a certain stock. Even if you're doing a quick overview, I can't do it in 1 minute.
Right.
I need a couple minutes to kind of, even if I'm just doing a quick overview, I need like at least 3 minutes to give you all the information for a quick overview of what I want to cover, just so you know the basics. And so, that's why I want to drive people to the podcast, because here's where we give you that information. Here's where even if we're doing a quick article, quick thought, it still takes a few minutes to discuss what we need to discuss. But
We have a lot of red meat on this show, which I like. I like that.
yeah,
We're not sound bites.
we're not.
We're in depth.
We are in depth, right? We are in depth. I did enjoy that. I was watching live TV on the plane back though. I was caught my Husker game. That was fun. So I was cheering as we were going up, then down, then down, then tide,
Yeah.
then down, then tide.
But
The whole
you know
game.
what
It
I
was great.
like about this show, though? Because
What's
when I
that?
was new to the investing world, I used to, wonder to myself, what do successful people who are successful in the stock market, what are they looking for? And then if you would listen to the media, it's all kinds of different conflicting messages. And,
Right?
one person is saying the opposite of another person, and it's all kind of overblown, ratings driven BS.
Yes.
And I wanted this podcast to be more focused on what are people actually looking at in the stock market and in the companies that they invest in. And I think we do a good job of that.
We try. We try.
Yeah.
How about we get into it then?
Sure.
Let's just do that. Rules, rules, rules. Brandon and I get together 5 to 10 minutes before the show and we tell each other what we're going to talk about. Here to lie back and forth, to bicker and the banter right here on the show for you. Now, I did tell Brandon what I was going to talk about, but he wanted to keep a surprise. So I have no idea what Brandon's about to say. Brandon, take it away.
All right. I guess I'm taking it away. One of I got two quick things I want to get into, and then I want a red meat subject that I want to dive
Gotcha.
into.
Go ahead.
Um, we were all talking about artificial intelligence taking people's jobs, and one of the industries that it's really hitting at right now is one that I did not expect, and that's financials. 18% of CFOs have eliminated finance jobs due to AI implementation. The majority of them are saying that accounting and controller roles were cut.
I mean, it makes sense. You could just have a robot do it. But
Yep, absolutely.
the problem I have with that is that you're putting too much into AI too quickly. I
I think
would
some people
say,
might be, but also I think that the crazy thing about AI is how quickly it is
yeah,
evolving
yeah,
at the same time.
but for the sake of those of investors, is the reason why I say my next statement. I would do it as like how Tesla is rolling out its autonomous vehicles, like for trucks,
Right,
right? They have a driver at the wheel, but the truck's doing all the work.
right,
I would say keep your controller for at least 6 months to a year while AI does the driving. And literally, yes, they have the easiest job in the world. They just sit there and watch. But I think everybody would feel more secure as an investor if you did it that way. I don't know.
right.
Maybe I'm too cautious. Maybe I'm at that age where I'm becoming too cautious with this type of change.
Maybe. Amazon has said that they're using artificial intelligence for generating internal finance reports. And they said about a year ago is when they started really playing with us. And a year ago, they had to double triple check everything because a lot of the answers were coming back wrong. And he said, the person that they were talking to, I can't remember if it was a CFO or CEO. I wish I would have put that in my notes. I don't remember. But anyways, um, he said a year ago they would have to triple check everything. And then this year they're kind of just double checking it and it's all right. It's all exact
So
where they
they
want
are
it to
doing
be.
the Tesla driver approach type
Right,
situation.
right.
Gotcha.
So, I mean, we're moving in this direction. I remember when we first started with the AI boom on this podcast, and I was like way cautious about it, saying,
You were
I don't
very
see what
cautious.
I don't see where this is making any money. Who cares about an AI chatbot?
Yeah.
And now, like, this is all revenue positive now for a lot of companies. A lot of companies like Google and AWS are seeing drive profitability in things like Google Cloud now.
Well, the
And
AI chatbots give them data. It gives them that interaction with human beings, and they use that interaction, and the AI will learn and grow on its own. So it uses each interaction to kind of learn and grow on how to be better suited for people.
okay, so we're gonna now transition into the big topic that I had. I'll save the small topic for my final thought, actually. This is a great
Okay.
transition because I started hearing some whispers in the media last week about another great rotation out of tech stocks and into financials and into value
I did
stocks.
too. I heard
Yeah.
that too. Yeah, yeah.
So what I did is I used Google's Gemini
Okay.
to track down these so-called great rotations that CNBC and Bloomberg and everybody were talking about
Yeah.
and give me a couple of different instances. Actually, I think there's five here. I didn't count them, but instances of where the market or the media in the market was saying this is a great rotation. Everybody's moving out of tech stocks and the value stocks and the financials are going to be the next bull leaders. And I said, track this down. Give me a 6 month performance of the S&P 500 and the Nasdaq from when they started saying this to 6 months out, and then a year out. And then I also asked for when the peak fear was, and then what the performance for a year out of that was. Because I
Okay.
wanted to see, like, okay, if somebody started hearing on CNBC, this is a great rotation. Start looking at the value stocks and the financials, and then start selling your tech stocks. What benefit does that have? I wanted to see if there's any benefit to this at all.
So here's my pushback on this theory, because I heard this too, is that the financials have had a big run up this year because they've done tremendous with high interest rates, and with also their trading revenue has gone up quite a bit as well. They've had all the big investment banks have had over a 10% jump in trading revenue for Q1 and Q2 so far this year. They've all had banner years already, and they've already all moved up. Most of them have moved up their stock prices well for the whole year. So I don't see much more movement in. fact, I see still more value in tech than I do in financials right now. I see financials as fairly valued for the most part. There are some opportunities, yes, that I've been looking at, but for most of the big financial banks, and by big, I'm talking, Brandon, let me specify, like Bank of America, Goldman Sachs, State Street, Vanguard, all the big ones. I see them as fairly valued for most of them, and
Okay.
I maybe regional banks might be what they're talking about, like a PNC, a Key Bank, something like that. First Bank Corp. I don't know.
So the question or the question that I was trying to get to is would it benefit the average CNBC listener or Bloomberg listener, watcher, whatever, to sell the tech stocks when the media was telling you to sell the tech
Yeah, and
stocks?
my point was like I don't see the data for it. So no, my answer is
Yeah,
no
no,
because I don't see the
it
data for it.
doesn't. And in fact, you're going to miss massive opportunities. So I want to
Yeah.
go over what this identified because this all came from Gemini. It back tested everything in about the course of 5 minutes. Did all this research for me, and I read it, and I agree with all of it. So uh,
Really? Okay,
yeah.
let's hear it.
So,
Let's
so
hear what Gemini has to say.
the first instance of and I asked to do the past 10 years. I asked to look at the past 10 years. Give me a second. I have to plug in my laptop. Hold
You're
on.
not even ready? We're doing a
Yes,
podcast.
I'm
We're
not
like
ready.
live on the podcast, and
And
Brandon
I'm
has to
plugging this
plug
in.
stuff in. What is going on, buddy?
Yeah,
Like
my
you've
volume.
got to be more on top of it than that. I need you to be here, man.
It's all good. Give me a
I
second.
need you to be. Wow, look at it. There's his clothes.
Yeah. All right, we're good. We're good now.
His camera's moving. If you're listening, his camera was moving. I'm seeing like pans of the whole room
All right.
here.
So the first instance here that it identified in the past 10 years of the media saying the great rotation,
Okay,
talking about a rotation out of tech stocks into value and into financials. They call
gotcha,
this the Red October correction. This was when Jerome Powell first started increasing interest rates in 2018. And the coinciding with that was when Donald Trump started clamping down on China.
gotcha.
Um, so we had an 800 point plunge in the Dow Jones Industrial Average there. So people did actually cycle out of tech and into to financials. The question is, what should you have done while they were doing that? And the answer to that is buying the oversold NASDAQ and high flying Magnificent Seven, or what we called FANG back then.
Yep,
That's your answer. So the sell off was triggered by investor anxiety over rising interest rates, compounding the fears with trade tensions with China. So the 1 year performance of the NASDAQ 500 from the start of the fear to the end of the fear there was negative 0.58%. So there was a negative correlation there, and the S&P 500 was up 0.54%. So they were up. But if you would have bought during the peaks of the fear, you would have made money on the rise back up. Um, Post vaccine great rotation 2020, 2021. They call this Pfizer Monday because this is when Pfizer was able to get their vaccine out onto the market. And people were saying, okay, work from home trade is over. The tech bubble that existed during the stay at home days is over. We're not going to have that. It's not going to continue going higher. Uh, Cycle out of your Metas and your Googles now and buy your retailers and your industrials. And some of that would have maybe, generated good results if you would have bought good companies here. But your 1 year performance on the NASDAQ from when they first started saying that we're having a great rotation to 1 year out, 33.94%. The S&P 500 was 32% 1 year performance. So you would have missed out on all of that. Now, here's my favorite one. This is the inflation driven route. And the reason it's my favorite, long term listeners will know this. Me and Dave called this accurately. We said this was going to happen. We said start positioning yourself now, moving out of the high flying tech stocks. And we gave you like a year on this,
yeah,
where we said tech stocks are going to underperform.
yep,
Start positioning for that. And then once the tech stocks started underperforming, what did we say? We said start buying them.
yes.
And it just so happens that coincided with the peak fear of CNBC and Bloomberg. When they were telling you sell, 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 that's when we started screaming buy, buy, buy.
Right. Like
Um,
earlier this year when I was getting angry at the CNBC guy saying, "Don't buy stocks."
right.
I still
Right.
get irritated with
Now
that.
the funny thing is here is if you look at the 1 year performance from the start of when they started saying rotate out to the for the Nasdaq and the S&P 500, they were actually correct about this one. This is the one out of four that they were right about. And at 1 year performance for Nasdaq there was 30 negative 32%. 1 year performance of the S&P 500 was negative 20.56%. Now the crazy thing about this one, this is where almost all of my unrealized gains that I have today came from. Because even though we had a negative 1 year performance in the Nasdaq and the S&P 500, I was taking all of that time to add as much of these beaten down tech stocks as I possibly could while they were screaming at you to sell, sell, sell. Their peak fear was actually when you should have bought, according to Google Gemini. So they established the start date for the narrative of the Great Recession as of February for that year, I believe.
When other people are
And
having garage sales, it's a good time to go in there and find some rare
exactly.
antiques.
Exactly. So during the peak of this fear, CNBC was saying they expect more rotation out of the tech stocks into banks and infrastructure. Um, they were just trying to price in reprice the technology sector with a new economic reality of inflation. But what they were doing is they were telling you to sell when you should have bought. This is like a lagging indicator. And the reason why I kind of wanted to bring all this stuff up now is because I don't really pay attention to the news media all that much, but I do kind of watch for headlines and such, right? And so when they use terms like the Great Rotation, my ears perk because, that's sort of like Jim Cramer crying about Meta on TV when he was in 2022 crying about it, saying everybody should sell, and he can't believe how wrong he was, and that actually turned out to be the day that you should buy the stock.
Yeah.
It's the same thing. So my ears perk, and it's like, okay, time to go value shopping in the tech sector. Anytime they say rotation, and now that I might not find anything to buy, but it's my lead, so to speak. People have sales leads at work where they're like, okay, I should follow up with this customer, that customer. This is where I'm like, okay, I should follow up with my portfolio and start searching for some good stuff to buy. Now, in 2024, at the beginning of this 2024 year, this is what they call the Magnificent Seven call for broadening, where CNBC started saying, and Bloomberg and the Wall Street Journal, it's not just CNBC doing it, it's the whole media that does this. And they started saying, well, the Magnificent Seven represents way too much of the market right now, so we need to start selling out of the Magnificent Seven, reducing your stakes there. And become more exposed to the value stocks and the industrials and such. Give me 1 second. Give me 1 second before you ask a question here. 1 year performance of the Nasdaq there was 38.6%. 1 year performance of the S&P 500 was 22%. So you would have missed out on great gains there if you would have taken their advice in early 2024.
So
I
I
want to
want
get
to
to my
add,
conclusion on this, but you can ask your question first.
I was going to add to this some other things to keep in mind too. And first, and the biggest thing to keep in mind during this time was the growth of retail traders. So retail trading, if people don't know, current day retail trading makes up 20 to 30% of daily volume as of right now, September of 2025. And retail trading makes up 45 to 60% of daily
Right.
option volume right now as of September 2025. It was a lot less back in the day. So the investment banks and all the big trading houses had more control over the market, so they can actually manipulate it even more. Nowadays, you got to get Jamie Dimon on TV and say, "Hey, you need to sell, sell, sell this." He does that, and then they end up a month later saying, "Oh yeah, we bought positions in that last month," while
Yes.
they were telling everybody else to sell. And he's been open that he's done this. Jim Cramer's been on video saying that he used to do it when he ran his hedge fund. All these people say they do this thing. So you really need to, yeah, listen but not listen when they talk,
Right. Right.
kind of read between the lines, if you will.
Oftentimes it's a contrarian indicator. And it's
Often,
lagging
not
because don't
always,
forget,
but yeah.
like CNBC's reporting on what's already happened. They're not
Yeah, but
reporting on what's
here's
happening.
why I give CNBC credit is they give you real-time news in the moment. They don't have a whole lot of time to spin it. They do spin it, but they don't
But
have
they
a whole
do
lot of
spin
time
it,
because,
and
huh?
it's overstated. It's overstated.
Overstated,
There's
yes.
yes, and it's ratings driven. So if
Yes.
fear gives them ratings, they
They
perpetuate
get the
fear.
sheet and they're like, how
Yes,
can I make this sound hyperbolic in any which way, shape,
right.
or form?
So
And
I
they
would
change their vernacular to hit that and make that statement.
I often tell new investors to not listen to CNBC or watch it, and
See, and
only
I tell
because
new investors to go ahead and listen to it so
yeah,
that they
but
can learn how to talk.
but they don't okay, but they don't learn right away what to listen for and how to make it helpful to them because there's all kinds of stuff that's just not helpful at all. And it'll, drive fear more than rationality. And but once you become a little bit more, you know, knowledgeable on what you're doing and what to listen for, then it can be helpful for sure. And some new investors it does, work for because maybe they won't panic as easily as somebody like me used to. And
Yeah, I remember when you used to do day trading options. I would
Yeah.
see you at at the beginning of the day, and you'd be all excited, and in the day you'd be stressing out, pulling your hair out, man.
Yeah, well, those options. Yeah, I remember that. But the thing is that like I just had somebody too over the last week ask me if they should buy Intel stock because of all the media
Yes.
surrounding the US government buying Intel and the Nvidia buying, taking a 5% stake, I think they took in Intel, which surprised everybody, including me.
Well, because NVIDIA signed a deal for Intel to create its chips
Right.
to partner. They
So,
partnered.
right. I I had to say no because CNBC, I think, and a lot of financial news media was running with a story making Intel sound like it was a lot better than what it actually is. And the whole reason why Intel is in the situation where the US government has to take a stake in Intel is that Intel sucks.
Yeah, I mean, and I owned Intel last year, and I had to
Yeah,
sell it for like a barely 0.5% gain just to get out of it
right,
because it was awful.
right.
It was awful. It was poorly ran. It's still poorly ran. Like you said, the government has to go in there and save the day and own part of it. Now we've done this before. I don't
Yeah,
like it when the government does it. I would rather the government just let these things, fail, but it is what it is.
right. So here's the conclusion that Jim and I came up with as far as if you should listen when they start saying the great rotation.
Let's
And
hear
it says
this. Let's hear this conclusion.
the data is unequivocal. In 3 out of 4 identified periods, a strategy of selling technology stocks in response to the rotation narrative would have resulted in missing significant positive returns over the subsequent 6 months to a year. The 2024 event was particularly stark, as acting on this narrative would have meant foregoing a gain of over 30%. Only the 2022 event, which me and you called,
Yep.
and we called it before. We didn't call it while it was happening, like other media does. We called it before so that you would be warned of it and you
Well,
would
I mean,
know what
because
to do.
all right, so here I want to add this a little bit too. Like people are like, well, how are you and Dave, calling this before? You got to understand between Brandon and myself, I would say what do we have about 35 almost 35 years of trading
Right.
stock experience,
Right.
and then we look back historically and we review things historically and we look at numbers and data, and we've read lots and lots of books. You could fill a library with the books we've read on stock trading and videos we watch. So there's a lot of knowledge here. I know we don't sound like it or even look like it. Especially, I got a Skyrim gaming shirt on right now. So like, I know we don't look like it, but like, we got a lot of
Yeah.
knowledge here.
So, and then this goes on to say the media correctly identified that value and cyclical stocks were outperforming technology. However, the headline rotation out of tech or tech route or however else they put it implies a negative outcome for anybody who's investing in technology stocks in that period, which was patently false in all 4 occasions. Because if you
Really?
would have bought during 2022 and then waited maybe over a year, or even at the beginning of 2022, a lot of these stocks are up from that point, anyways. But if you would have bought when the media was peaking in their fear mongering, you would have made a lot of money actually in 2022, just where most of my unrealized gains come from. I put a lot in GE Vernova, GE Aerospace, Meta, both Meta and GE. I'm now more than 5 times up over my money. And I think I started those positions in 2022. Maybe GE was 2021. But anyways, I added a lot to it in 2022 if I'd started it earlier. And Meta, I think I started in 2022. So that was really the best time to buy. And yes, it was a sustained period of a contraction for those tech stocks, but that just gave you more time to buy up
Right.
quality companies that have been beaten down. Also, Gemini tells me it appears as if this great rotation narrative, given how much it's used, is just a news template that media companies can apply anytime large companies are rebalancing, which is what's essentially happening in these occasions. They're driving the tech stocks down because they're selling their gainers and they're buying their more beaten up stocks. And
And
it's a
they
rotation that usually happens about like 2 or 3 weeks, maybe a month. Sometimes it goes longer, like these 4 did,
and
but
they got to
oftentimes not.
push the narrative. they got to push the narrative on all these channels because 20 to 30% of the market is made up by retail traders who they don't control.
Right.
And so now they got to really push these narratives on the
Right.
all these channels and across social media. Come on, 'cause you got to think like, do you not believe that Goldman Sachs probably has a group of people that all they do is post on stock tweets or
Right.
post on
So
Instagram? Come on
here's
now,
the
they
crazy
they got a
thing.
group of people. That's what they do.
So here's the crazy thing about this. This report took me about a half hour to put together to find out. We do this stock program as our, kind of a part-time gig, right? Where we do it once every week. These people on
And we love
CNBC
what
are
we do,
doing
by the
this,
way. We love what we do, but if you want to give us a
right.
million dollars, feel free.
No, but these other reporters are doing this every day, and then in some
Right?
cases 20, 30 years. They know what they're doing. This
Yeah.
information is available to them as well, and I'm sure they already knew it.
And they have a staff that can do all the research for them.
Right,
This is just Brandon and I doing this research here on our own.
right. So they know what they're doing. They know what they're doing. So not only did Google's Gemini indirectly call these other media outlets liars, but it also called them lazy.
And it drives me nuts because I get so frustrated with these individuals who go out there and spread these lies or mistruths or half truths, or maybe they're just being a little deceitful or trying to lead you down the wrong way, because there are people who actually take their savings and invest based off of that. And
Right.
that's what irritates me. I don't care if you want to
So
do that. That's your choice. But don't lead people down the wrong path and have them lose money because of it, because they worked hard for that.
right. So you know what's happening here, right? So if when peak fear is coinciding with the bottom of the market, that means that these big companies, these big investment companies, are buying at the bottom because that's what created the bottom in the first place. So the fear drove it down to a price that they wanted to buy back in at.
Yep.
And then they bought it back in, and that's why you've got the incredible gains that are made from there on out.
That's where you get that, 10% jump in trading revenue
Right.
in Q1
Right.
because of all the tariff concerns that they were pushing. Oh, we're worried about tariffs, worried about tariffs, worried about tariffs. Who was the biggest buyer during that whole time? Investment banks.
Yeah.
Investment banks buying, buying, buying as they're going on TV telling you not to buy stocks.
Right.
Don't get me on that
So
soapbox again
so
because
it
I'm
doesn't
irritated.
mean like if you start hearing things like the rotation or tech route or tech plunging or anything like that, doesn't necessarily mean that you have to go in and start buying the stocks. That's just your signal to go in and start looking. It's a contrarian indicator for the discerning investor, and that's when, you're able to really identify what you should be listening to in the media. Sometimes they do make good points, but you kind of have to decipher it, right? Like what actually means something and what doesn't. And what should I be doing that's opposite of what they're telling me to do?
There's a good book out there for people to read if you're new to investing and you want to learn some terminology and kind of understand things. It's called The Warren Buffett Way.
Yes. Yeah, that's the first book you recommended to me on
I
stock.
always recommend it. It's a great book by Robert Hagstrom. Great book. Read it. It will teach you about how to value stocks in a very basic way. And you build
Yes.
off of that. You build off of that.
So it's about time for me to go back to that book because I've read it multiple times.
Yeah.
And during times where I started to get a little discouraged, things didn't work out with the stock the way that I wanted them to or whatever, I just go back to that book and get my mind right again. And I've read the book and listened to it multiple times. Got the audio book and the print version.
Nice.
Yeah.
Love that. I tell you what, when I get a loss, when I take a loss and I have I just take a break from everything. I
Yeah.
turn off all my apps. I turn off everything. I don't watch any news channels as far as stock news channels, nothing. And I just take like a few days and I don't know, go on runs, do whatever I need to do, go play some video games, something. And I just forget all about the stock market. And then I come back with a fresh mind, fresh, ready to redo things. It's like a reset.
Right.
I need a reset because I made the mistake for a number of reasons. But for me now, I probably got too cocky and confident is how I look at it for myself.
Right.
I
Well,
probably
the
missed
reach.
something. I missed something because I had too much hubris. And if you don't know hubris, I missed something because I believed too highly in my own intellectual ability that I was like, nah, this is good. This is good. And I missed something.
Yeah. When you're trading stocks, it's easy to try to force something or to try to chase, a gain or whatever,
Yes.
and not think rationally about it. Like, if you're like, oh my gosh, if you're like halfway to like thinking about like you're half and half, like, should I buy into this right now? Did I miss the gains? Whatever, you probably shouldn't do anything with it if you're in that mindset
Right.
at all. If you're trading now, if you're investing, you just buy and then you don't care about the down days or the off days or even down weeks and sometimes even down months you don't care that much about. If the stock of the company is actually doing really well, but the stock's not doing so well, you just have to wait for the reversal or cost average down.
Yeah.
But it's
Some people don't like that though.
yeah. So I do watch my stocks every day, but I like it just because it interests me.
Yeah.
And it's not that I really care about the daily gains up or down anymore. I just think it's interesting to
All
see
right.
what's happening. But go
Look,
ahead.
can I do a hard transition over to what I want
Yeah,
to talk about?
absolutely.
Thank you.
Absolutely.
Let's do a hard transition. Finally. Finally, it's all about me now, Brandon. Finally. All right, so I'm going to mention a couple of things here. We're going to go into Novo Nordisk, Eli Lilly. We're going to cover a few things for these companies, and it's because Eli Lilly had some news that broke last week. It was good news, for good and bad news across the board for Eli Lilly. And the good news had to do with their pill form of the weight loss drug. So everybody knows they have Mounjaro and Zepbound, and it's the injectable drug that you can take in order to help with weight loss or a number of other issues as well. It's not just weight loss, diabetes, or it helps with, oh man, sleep apnea. It can be used for that if you have I forget, is it constructive, deconstructive sleep apnea? I don't know. Congestive sleep apnea. I was gonna get it. I was gonna get it eventually.
I
Yes.
yeah.
So it can be prescribed for those reasons. So, anyways, their pill form came out and it had some okay results. So what it showed was that people the next experimental GLP-1 pill, I know I'm mispronouncing that, help people lose about 12% of their body weight, with weight loss plateauing for most patients in the 72-week trial. So in 72 weeks, they tried this. That's a long time, by the way. That's a year and a half almost. And they lost about 12% of their body weight using the pill. Now, the reason why this was a big study for Eli Lilly and they needed big numbers here, which they did not get, was the pill's so much cheaper for the company. And if it's cheaper for the company, it's cheaper for the end consumer. If it's cheaper for the end consumer, more people can just afford it. And they don't need to go to a Hims or a Hers for lower discount compounded drugs, or, you
Mhm.
know, what I'm drawing a blank, designer drugs, if you will. And so this is going to be more profitable for Eli Lilly if they could get the pill to market, and that's the real goal here. More people would like a once daily pill versus a once a week shot. However, with just 12% body weight loss in 72 weeks, that's not enough for most people. Considering most people are getting much higher results than that with the shot that they currently have going on. However, then the name of this pill is orforglipron or for lip. I'm messing up names right and left here. It showed clinical meaningful improvements across key cardiovascular risk factors, including cholesterol levels and blood pressure. It said the highest dose of the drug reduced the key marker of inflammation by 47%. That was great news for them. The most commonly reported side effects were mild to moderate, which is typically what you're getting right now with the shot. So nausea, of course, is the most one because that's what you get right now with the shot. But the thing to look at was the liver, right? Because that's what some people are saying is really bad if you take the shots was the liver. So the liver safety was thoroughly evaluated and concluded that there was no concerning pattern of liver issues among patients taking the drug. And this has to do to the pill form. So overall, not bad. However, the weight loss was not what everybody was looking for in this trial. That's why you saw Eli Lilly drop 5% to 10% and stay down within that range the day that these news came out. At first, I was concerned because they were showing some weight loss, but then I posted on StockTwits, like in the Metsera StockTwits forum, I was like, hey, Eli Lilly's numbers came out. They're not looking too bad. Everything, there might be some concern here with Metsera. There might be a drop today, yada, yada, yada. And then after looking into the numbers a little more, I wasn't that concerned. I was like, okay, this actually might be good for Metsera. And I commented on my own post in the stock twits under Metsera. And then a few hours later, everybody else in the Metsera started copying me and talking about Eli Lilly and the drug results. And I was like, okay, whatever, guys, that's fine. I just know I was first. But nonetheless, Metsera actually went up because that's still a good one to own as far as if you're looking for a weight loss drug company, pharmaceutical play in the weight loss industry, Metsera is still a good one to own. Here's why, right? Keep in mind, Metsera showed a 8 to 9% loss in body weight just off of 6 to 9 weeks of their study. And it was a I want to say once a month injectable is what Metsera has because the half-life is longer. And so that's much more appealing to everybody involved. You just got to do it one shot, one time a month. Boom, you're done. You're good to go. Everybody loves that half-life. Everybody loves the results you're getting with Metsera. It's a much better drug. However, it's still only in phase 2. It's got one more phase to go before it can get full FDA approval because there's already drugs on the market. The reason why I keep pushing Metsera is just because Eli Lilly and Novo Nordisk were first to market doesn't mean it's always going to be the best drug in the long term. Other companies will see the success of that and then they'll find a better way to do it. And I believe that's what Metsera does. That's why I own Metsera. Right. So I was talking over this news with people this past week, and some individuals were asking me, wasn't there another drug that you thought Eli Lilly was doing well on? And I said, yes, there is another one in their pipeline that I think actually is going to produce billions and billions of dollars for them in revenue if they could get it to market, if they could get the FDA approval and get it to market. And that one is their cholesterol drug. I've already talked about this before. If you go back, you find our previous episode. I wish I knew what episode number it was, but it is a lepodisirin and I know I'm mispronouncing that. I'm doing my best here. I apologize. But this one is the Eli Lilly cholesterol drug. If you Google that, you can find it as well. They are in currently, they finished phase 2. They're currently in phase 3 testing of this. That one, when you did the full range of dose, so it was an 18-month long study, it reduced the bad cholesterol in the body by over 96%. And that's what I was covering on this a few months back. So I was saying that is a great drug in the Eli Lilly pipeline because you think of all the statins that are currently on the market right now, cholesterol statins, right? These are cholesterol drugs that people commonly use to help with their cholesterol problems. If you look at the revenue being brought in by them by AstraZeneca or Merck. I'm trying to combine Bristol Myers and Merck in my head, and I said Maersk. That's also a shipping giant too. But all these other pharmaceutical companies that have these statins on market, they're making billions in total revenue. Well, this drug by Eli Lilly could replace all of them. And so you look at that potential there, potential for billions in revenue coming in for Eli Lilly. That's a great one to believe in their pipeline. So that's great that Eli Lilly has that in their pipeline ready to go. But yes, that is the one. So people were asking me about that, like, in regards when I was talking about how they didn't have the best results on this weight loss drug. First initial thoughts, Brandon, on the Eli Lilly news from this past week.
Well, Eli Lilly has always been a very well run company.
Yeah,
So
and
maybe
unlike
just
Novo
adding.
Nordisk, they have more than just the weight loss drug.
So did you mentioned that I think with the trials that they weren't expecting necessarily weight loss?
For their weight loss pill, that's the one I started this conversation about. They
Yeah,
wanted higher weight loss than just 12% in a year and a half.
gotcha.
That was a low number for them. They were looking for
Okay.
more. Well, the market,
12%.
investors were looking for more. How about
I
that?
mean, 12%'s really high for
Not for a month, a year and a half,
wow.
a year and a half of time. That's not high.
I'm still concerned over the health implications over using it for weight
They've
loss.
been Brandon, these drugs have been out for over 10 years
And
now.
they
You
have been,
can't
but
keep bringing this up. Every time I bring up these weight loss drugs, you bring that up. We've been talking about this for almost 2 years.
no, I know, but and they have been around for a very long time for insulin and diabetes and such.
Yes, yes.
And then they discovered that, oh wow, these are weight loss pills also. and it's not going to be, a weight loss pill that kills you like the previous weight loss pills did.
Yeah,
So it's still to me like, okay, we didn't know that this was a weight loss. We went ahead and got it FDA approved because we figured out it was a weight loss drug. Even when it was FDA approved at the very beginning, they didn't know why it was making people lose weight at the very
it did.
beginning.
It did.
Now they
It was
do.
getting rid. Yeah, it was getting rid of the appetite.
Yeah, and now they know why.
Yeah.
Because it slows the amount of time that it takes your body to move your food to the smaller intestine. And so you stay fuller for longer. So they've figured that portion of it out at least.
It's more than just that because you don't get so people who are obese when they take the drug, right, and
Yeah,
they first start taking it, if let's say they can eat a whole large pizza by themselves, right?
right.
You start taking this drug after three, four slices, you're full. Now, normally that wouldn't even fill up your stomach because you're obese and you can eat a whole large pizza. But you ate three, four slices
You,
and you're full.
I didn't know this podcast was going to be a time to take shots at me, Dave.
I'm just saying, like, I mean, it's crazy what it's doing. But my whole point is,
It is, and so
yeah,
far it's worked out, and so
it's
far
so far it's
it's
worked
been
out.
well.
Now,
Right.
here's the thing: it hasn't worked out for Novo Nordisk. The stock has taken a huge hit, and I've covered it on the way up when Novo Nordisk was moving up, and then I've covered it on the way down. I had a podcast all about why I was selling it at its peak near. I got it near. I sold it near its peak. I'm very lucky on that. But I had a whole podcast on why I was selling at that time, and then now here we are, and Novo Nordisk is like cutting the staff
I don't know if
because
that was luck though, because that's also another thing that comes with experience is just trusting your gut. And sometimes you can't quite figure out why you think you
yeah,
should sell a trade that you have, but you know you should.
yeah, and I did, and I saw, and I was public
Yeah.
because every week I was covering where my position was at, and it was public. But Novo Nordisk is having trouble. Unlike Eli Lilly, they don't have other drugs that they sell in their pipeline that are big, well known, and this is their only one, and so their stock has fallen over 50% since its highs, and they're continuing to have trouble. They're cutting staff. They're still making billions a year off of their Wegovy and Ozempic. They're still raking in the billions a year off of this because they have deals with CVS and other companies out there. So they're making a lot of money. It's not that they're not making money. It's that they're trying to find ways to streamline the business and take that revenue stream and create other revenue streams.
Right.
And that's where they're having trouble. And they need to bring in my opinion, here's my opinion. They need to bring in new leadership that know how to do this.
Right.
Bring in some executives from some of these other companies, Bristol Myers, AstraZeneca, some of these other Johnson and Johnson, Procter and Gamble that have done this before. Bring them in and have them lead the charge there.
Johnson and Johnson, I might leave that one out. Or Pfizer because it's people looking for work for all the wrong reasons, but
Well, anyways, yeah, they Novo Nordisk is still having issues. I still don't, I'm not a fan of the company at the current price. I'm not going to buy it right now where it's at. Eli Lilly, though, they have a bright future. They took a hit initially last week because of this. It was a good time to maybe buy in a little bit if you were looking for a pharmaceutical company because Eli Lilly has a great pipeline, and that's where I
sure,
wanted to leave it.
sure.
So. My last little bit of quick news here. This is very quick, should take us 2 minutes to cover, Brandon. It is oil. So oil prices dropped on. I'm just going to read the whole. It's a Reuters newswire that came out just today. Oil prices dropped on Friday as worries about large supplies and decline in demand outweighed expectations that the year's first interest rate cut by the U.S. Federal Reserve would trigger more consumption. So Brent crude futures settled down at $66 a barrel about, and WTI futures finished at $62 a barrel. Both of them were down over 1% on Friday. So concerns that people that the interest rate cut is going to spur the economy cause oil prices to slide, according to this Reuters newswire, which
What?
I think it was more that and the fact that Iraq also raised their output and the fact that Nigeria wasn't meeting OPEC's output goals and Nigeria contracted out with a contractor from outside of Nigeria to come in and actually run the program there because they are not getting the oil outputs that they would like. So I think that was bullish news for
Sure.
more oil output. So more supply means lower price,
Right.
lower
And that would
cost.
be,
So Iraq pumping out more, Nigeria bringing in extra people so that they can actually pump out what they're supposed to pump out, and then the fact that, we are going to have possibly a stronger Q4, which I don't know. I don't see the inventories coming in. I didn't see the inventories numbers coming in to produce a strong Q4. But again, I said that last year and I got it wrong.
yeah, I don't either. I don't have, and I'm not going to say it's going to go the other way either because there's no clear, concise data that points in either direction.
There's
And a quarter
not.
point Fed rate cut's not going to have an overall impact over an entire quarter for, the entire stock market either. So
Yeah.
I don't know. The only thing I could think of, and the only way that a quarter rate cut would make sense that we have a better market is that people become a little bit more positive in their outlook. Maybe now that we have more accommodative Fed. I don't want to say that we have an accommodative Fed because it's not quite right. It's just
You
more
wouldn't call it
accommodative.
dovish? You wouldn't call it
I
dovish?
wouldn't. I wouldn't call it dovish. No,
Okay. All right. Fair enough.
more dovish maybe than what.
Dovish, if you're a new listener and you're a new stock trader or investor, dovish means one person that's going to do whatever you want. They're going to give you what you want, basically. That's
Right.
a basic layman's definition. And hawkish means they're not going to give you anything you want. They're
Right.
going to be very opposite. So
Right.
those are the two terms used usually in regards to the Fed. All right, here we go. Earnings this week. I only have three on here to call out. But there are three, I think, good ones. Tuesday, you got Micron Technology, a chip maker. I want to see what they say news on chip and chip productions, especially in regards to China. I want to see what they're saying on deals with China and chip productions and where their chips are going to be made. That's coming out Tuesday. On Wednesday, you have Cintas reporting. Cintas, if you don't know what that company is, they work a lot with other companies. So industrial, commercial businesses, and how much are they spending? Are they losing contracts? Meaning our business is cutting back on spending on things, or are they growing contracts, meaning businesses are willing to spend on these things, and thus it's a stronger environment business from a commercial industrial side. That's one thing I'll be looking at their numbers wise. Thursday, here's a big one. It is after the bell on Thursday. It is Costco. Costco reporting on Thursday. Love to see what they say about the upcoming holiday outlook.
Yeah.
So we have Halloween and the other holidays coming up, Thanksgiving, so on and so forth. All the big ones. We want to see what Costco is going to say in regards to Q4 guidance. And that's what I'm going to be looking for from Costco on Thursday after the bell.
I think it's interesting though that you said. Did you say Reuters was saying that a good core Q4 should be happening? Is it was it from Reuters?
That was the Reuters Newswire. So it's just
Okay.
that one person who wrote that article.
Okay, gotcha. All right, that makes more.
Yes.
Because if you remember at the beginning of this year, and then even more during the April tariff situation, um, this is about the time when everybody and their mom and the media and every reporter was saying we would have a recession by, or that we would
Right.
be deep in a recession. Late 2025 is what they were
Yeah.
saying. So now you're just reading me a news report from Reuters saying that Q4 may be off the charts or at least really
I
good.
don't know about off the charts, but yeah.
Really good, right?
That's what that reporter said.
Yeah.
That's
So
what that
that's
reporter said.
that's how useful these analyst predictions are.
Yeah, and keep in mind, Reuters, when they have news wires, they kind of just report. If you're I don't know how they certify their journalists or reporters or what have you, but if you're on their list and you put out a news article, then they just go ahead and put it out there for anyone to
Sure.
read. They don't do too much reviewing of these articles. It's more of a reporting service, and so I like it, but you do get sometimes articles that you're like, this is just complete slanted. Yeah, I'm not even going to listen to it.
It's insightful for sure. It's absolutely insightful, and that's how I prefer to get my stock market news too, is through the print Reuters and such. And Wall Street Journal is just driving me insane lately because there's It's just all political. It's just ridiculous how
It is.
political it is. Everything on their front page is about politics and
Yes.
not about, actual stock market news, which is wild. Every once in a while, something will sneak by them and they'll accidentally put some stock market news on their front page. But it's it's crazy how that works. But I just don't I don't know. I think it's still like the point stands that it's like, just 6 months ago we were all saying, well, 5 months ago we were all saying it maybe even me at that point because I was so anti-tariff and still am, recession in the back half of 2025
I
and
wasn't.
here we are. Here we
I
are.
wasn't saying that. I was standing alone by myself saying it's not going to happen. Not going to have a recession.
But even for me, when I was thinking that it was going to be a recession, I was still shopping for stocks. And, that's kind of the difference between me and them, I would think, is
Well,
that,
let's
like,
go
I'm
into that.
still
Let's do our
buying
final
when,
thoughts, Brandon. Final thought. Go ahead.
yeah, buy when something is is a value. That's it. Who
You
cares
said
what
you
you
had
think
something
you
for
think it
final
should be?
thoughts. Let's hear
I
it.
do. I do. So my final thought right now is that I want people to buy Google stock after this antitrust result. And their antitrust issues are nowhere near over, but this is at least a step in the right direction. And I started researching or not Waymo, but Google again. And I love it. I absolutely love it when something pops out and surprises me as a reason to continue to hold the stock that I didn't have before. And that's Waymo. And Waymo is now operating at an annual revenue run rate of approximately $260 million. The figure is growing exponentially. They've increased fivefold in the revenue from Waymo from early 2024. And I just look at Google Cloud growth trajectory has been awesome. 35% year over year increase in Q3 2024, and then a 28% in Q1 2025, 32% increase in Q2 2025. That's awesome. I was thinking cloud growth was going to be a factor here. It's much more than I thought it was going to be. And now that Waymo is popping out, a company, by the way, that was, and I believe still is, in their other bets category because people weren't paying attention to it, is that's spectacular to me.
Well,
I
I mean,
still
think
think
about
Google's a
it,
good value here.
Brandon. Once these go out in every city, and everybody's used to seeing them everywhere, and then you get more and more and more of them. And after they're in every major city in 5 to 6 years, most cars are just going to be autonomous.
Yeah,
Most new cars, and you're just going to have them driving themselves all over town, and then the roads will actually be safer,
right.
and then Waymo's going to be worth way more.
I agree. It's good, and it's not something I was accounting for when I actually bought the stock. Not a reason at all in any way.
You and I bought around the same time,
Yeah.
pretty close to it. I was very happy to see in the last 3 to 4 weeks a over $50 a share jump in price. That made my day considering I took that hit on bullish recently, which
Yeah, and I still think it's a good buy
yeah,
right now.
I as well. All right, into my final thoughts. Going into this week, not much I'm looking at. There's not a whole lot of news. The news came out this past week. Not a whole lot of earnings. It's a good time to reflect. It's a good time to do some deep dive in research. Maybe find some companies you're interested in. Look on the Chinchilla Picking website. You can read an article about how to grade a stock. That's a great tool to use. Use it. Go down, find some stocks. Figure out which ones you're looking at, why you're looking at it. Maybe send us a DM and we'll try to answer your questions for you. If not, we'll answer it here on the podcast for you. Other than that, it is now fall. Go get your pumpkin spice latte. Go have fun. Or if you're like me, I can't have a pumpkin spice latte because I'm trying to watch my calories. By the way, for those of you who care, I don't know if anybody who listens to this cares. I am down so far this year 70 pounds in weight
Nice.
loss just this year alone. So, watch your diets, go to the gym, lift weights, and yeah, exercise. I mean, I just care about people doing well. Weird, isn't it? All right. Thanks for listening. Please hit the subscribe button if you like it. As always, we hope we've been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.